Today we're looking at 15 real estate exam questions on alternative financing. What is the key feature of a graduated payment mortgage? A. Payments are fixed throughout the loan term. B. Payments decrease over time. C. Payments start low and increase at scheduled intervals. D. Payments vary based on market rates. C. Payments start low and increase at scheduled intervals. A GPM allows borrowers to start with lower payments that gradually increase, typically used by borrowers expecting income growth. A bridge loan is typically used A. to purchase investment properties only, B. between the sale of one property and the purchase of another, C. for long-term financing of commercial real estate, D. when refinancing a mortgage. B. between the sale of one property and the purchase of another. A bridge loan provides temporary financing to bridge the gap between two transactions, like selling a home and buying a new one. A blanket mortgage covers A. a single residential property, B. multiple properties under one loan, C. only commercial properties, D. a property and the homeowner's vehicle. B. Multiple properties under one loan. Blanket mortgages are used by developers or investors who are financing more than one parcel of real estate. What is typically required before a construction mortgage can be converted to a permanent loan? A. Property must be rented out. B. All contractors must be paid in full. C. Construction must be completed and inspected. D. The borrower must refinance. C. Construction must be completed and inspected. Construction loans are short-term and convert to permanent loans after completion and inspection of the structure. What characterizes a subprime loan? A. It is backed by the government. B. Offered to borrowers with excellent credit. C. Higher interest rates due to increased risk. D. Fixed interest rate for the full term. B. Higher interest rates due to increased risk. Subprime loans are designed for borrowers with poor credit histories and usually come with higher interest rates. Before we move on to the other questions, please subscribe. Hit the notification button. It's free to do so, and you can always back out. Also, hit the like button and leave us a comment. One last thing, check out our channel. We have hundreds of real estate exam questions that will help you pass your real estate exam. A purchase money mortgage is used when A. a buyer pays the full price in cash, B. the seller finances part or all of the sale, C. the buyer gets a home equity line of credit, D. the buyer assumes the seller's existing mortgage. B. the seller finances part or all of the sale. In a purchase money mortgage, the seller provides financing directly to the buyer, often when traditional loans aren't possible. A wraparound mortgage is A. a second mortgage that includes the existing loan balance, B. a loan for remodeling and renovations, C. used to buy land only, D. offered only by FHA lenders. A second mortgage that includes the existing loan balance. Wraparound mortgages combine a new loan with an existing one, and the borrower makes payments to the new lender, often the seller, who continues paying the original loan. Which of the following best describes a balloon payment often associated with a blanket mortgage? A. Small periodic payments. B. A large final payment due at the end of the term. C. Increasing monthly payments. D. Payments based on home equity. B. A large final payment due at the end of the term. Blanket mortgages and other short-term financing options often require a balloon payment at the end. Why might a borrower choose a graduated payment mortgage? A, they want fixed payments. B, they plan to sell the property quickly. C, their income is expected to rise in the future. D, they want to avoid negative amortization. C, their income is expected to rise in the future. GPMs are ideal for borrowers with limited current income but strong future earning potential. What type of loan would a developer most likely use to finance multiple lots simultaneously? A. Construction loan. B. Blanket mortgage. C. Bridge loan. D. Farm. B. Blanket mortgage. Blanket mortgages allow financing for multiple properties or lots under a single mortgage. A wraparound mortgage benefits the seller by A. Lowering their tax liability, B. Earning interest on the original and new loan, C. Receiving a full cash offer, D. Paying off their existing mortgage early. B. Earning interest on the original and new loan. Sellers benefit by collecting payments at a higher rate while continuing to pay their lower rate original mortgage. A bridge loan is also known as A. Permanent loan, B. Swing loan, C. Blanket loan, D. Subprime loan. E. Swing loan. Bridge loans are also called swing loans and serve as interim financing. What is the key risk associated with subprime loans? A. Fixed interest rates. B. Default due to high payments. C. Government guarantee. D. No down payment required. B. Default due to high payments. Borrowers with subprime loans are more likely to default because of higher interest rates and less favorable terms. In a construction loan, disbursements to the builder are usually made A. At the beginning of the loan, B. In a lump sum after 6 months, C. In stages as work is completed, D. When the borrower decides. C. In stages as work is completed. Construction loans disperse funds in phases or draws as specific project milestones are reached. Which of the following loans is commonly used when the buyer doesn't qualify for a traditional mortgage? A. Construction loan. B. Wraparound mortgage. C. Purchase money mortgage. D. Blanket mortgage. C. A purchase money mortgage. This is often used when the seller finances the transaction directly, bypassing traditional lenders. Before we move on, please take the time to subscribe and hit the notification button. It's free to do so. Also, hit the like button and leave us a comment. One last thing, check out our channel. We have hundreds of real estate exam questions that will help you pass your real estate exam. Have a great day.